Hey, everybody, welcome back to another episode of Real Estate with Garrett Maroon. I am glad to be with you and always trying to walk you through some important topics of the real estate market, just to educate and serve and help in any way. And as always, if you need more help or want to learn more about the real estate market, you can reach out to us at maroongroupva.com. We'd love to serve you too. Today's topic is very applicable to the time. A recession is here, so now what? Right? A recession is here. So now what? Well, it's official, right? We have had two consecutive quarters of negative growth in the economy, and that technically constitutes a recession. And now we've all felt inflation already in a tightening economy. So, in my opinion, naming a recession is just really putting a term to something we were already experiencing. And so the question though is, what does that mean for real estate? What does a recession mean for real estate? So, first, I want to understand. Let's understand how the economy works. Picture a snake in your mind that's got a slight upward trend, right? You see the curvature of the snake up and down, up and down. That's the real way the world works, right? And the real way the world goes. When we hit the top of the curve, we tend to ride those good times for 7 to 9 years on average. Then, when we start going down from the top to the bottom, it takes around 18 months to get there. And the bottom is wherever the economy lands. Nobody knows what the bottom's going to be. Once we've hit the bottom, then it takes around 2 to 5 years to go from the bottom back to the top. And when we get to the top, we're actually higher than we were the last time at the top. So I hope that makes sense. So 7 to 9 years riding the high, 18 months to go from the high to the low, 2 to 5 years to come back from the low up to the top again. Then it starts over 7 to 9 years at the top, and the cycle is just starting over, right? We think the economy stays relatively consistent, but it's just not true. So it wasn't unexpected to have a recession. Now inflation makes it worse, as bad as the inflation has been, but a recession was certainly going to come. So again, what does that mean for real estate? First, we will absolutely see fewer sales this year than originally estimated, certainly far fewer than 2020 and 2021. Then we're likely going to see another down year for sales in 2023, but it won't be as significantly down as 2022. So we will have a down year 2022. We'll start to see an uptick in 2023, but certainly not be at these past 2 years when the COVID years. We certainly won't be back at those levels. Second, interest rates are going to start leveling off, and they might have already done so. We're not sure yet, but they'll level off around the 5% range. And this is going to help the market because buyers are going to start recognizing this is the new normal and will return to the market. Many buyers were waiting to see if rates would come down before they entered back into the market. Third, we'll continue to have a shortage of sellers, but the fewer buyers in the market will help us return to a more balanced market. So the number of sellers is actually going up. Now we're still short, but the number of sellers is actually going up slightly. The number of buyers is coming down. So we're more close or closer to a balanced market. Fourth, that means it will be more likely that sellers are going to help pay buyer closing costs again, and maybe even give a listing price discount and approve a home inspection, right? Again, a balanced market. We've seen all this crazy stuff happening, and buyers basically had no room for negotiation. We're going to start to see that rebalance, and that's a good thing for everybody ultimately. And fifth, what hasn't changed is that a home is still going to be the best way to hedge against inflation. So if you're a seller, it is still a good time to sell. Now, it's going to take longer than it has in the past 2 years to sell. Absolutely, it will. And the negotiation between you and the buyer will be more balanced. But with a continued lack of inventory, your home value will stay strong. And most sellers have a lot of cash built up and equity in their homes, and they can use that to their advantage. Now, if you're a buyer, recognize that owning a home is always better than renting. You may now have a 5.5% interest rate, but remember, renting a house is 100% interest rate. You never see any of that money back, and you are just giving 100% of your money away, right? It's not helping you in any way other than giving you a place to live. Now that these rates are leveling off, you no longer need to wait to enter the market. Keep in mind that you might have heard this. You should marry the house and date the rate, meaning pick the house you want and love it forever. That's the primary mission here. and then deal with the interest rate for now, because when it goes back down, you can refinance into that better rate. There were millions of people when COVID hit who had 5 to 10% interest rates. I knew many of them. They love their home, but guess what? The interest rates dropped really low. They refinanced. Already love their home. Now they just get a better deal every single month. That's a good thing. So marry the house, date the rate. And finally, as I mentioned before, owning a home is a great hedge against inflation. It is always a way to build your long-term wealth, which is what we're interested in. So if you have any questions about how the recession will impact you or your friends, reach out to us at www.maroongroupva.com. Thanks so much for tuning in.